What is up, DNA Nation? It's your boy, Dwayne Stein, Mortgage Gumbo, and the legend, Andrew Makovic.
Oh, it's too kind. Too kind. Thank you.
And it's Mortgage DNA. And today, DNA is all about DTI. We'll get to that in a second. Good to see you, my man. How you doing, Andrew?
I'm well.
How's life up in the northern part of the hemisphere, man? Oh, yeah, hemisphere. Yeah.
Yeah. Country. There we
Yeah.
go. No
How's
complaints. I mean, spring is in full swing. We've got a lot of rain.
Yeah.
Lots of rain up here. I'm sure you do too.
Yeah.
Yeah.
We had a couple tornadoes hit yesterday. Power was out, man. So it was a little hectic down here in South Louisiana yesterday. Kids were home from school. They're home again today because a couple schools got hit by tornadoes and stuff like that. So
that's horrible.
It's so it's tough, and I'm just trying to. I feel for the parents who look. My son's in high school; he can kind of do his thing, but for those parents that have the younger kid, I mean, is that a day off of work? You're now losing money. I mean, a lot going on there. So kind of crazy. So let's jump in. I know we usually do this as the hump day holla, but yesterday we were tied up couple closings because that's what we do. And then we wanted to let the CPI report have its day, and wow, was that Andrew, here's what I'm going to say, and I've taken your approach on this. In life, control the controllable, right? And at the end of the day, you and I can't control what these reports are. We can have our own thoughts, and Lord knows, hey, we're not going to do it here on Mortgage Gumbo. I give my in-depth analysis and my BS meter on a lot of this stuff. But I think when we're looking at it, look, the report came out. It's no secret. Things are tough right now.
Right.
Inflation's rising. The jobs reports, they are what they are. They're trying to tell you everything's great. So, and for all those folks who are like, oh, it's an election year, they're going to dump rates, they're going to cut, they're going to do this, they're going to do that. This is the reality of when, it doesn't work out the way they were hoping it to be. And,
listen, it was 0.1% higher.
Yeah.
Come on, man. You're going to tell me that makes bullshit.
Right.
It's I don't know. Listen, I was looking
at and then it crapped up. I mean, dude, it put rates into like a tailspin.
Yeah. I don't know how that's relevant. I don't, but it is. And then today, the PPI report. And listen, I'm watching this stuff.
Yeah.
And I'm like watching it because I'm like, man, I'm going to learn something. But I've been watching it for years. Do you honestly watch? Does anybody even know what the hell is being said? Because I talk to people that are like a professor in college, that does micro and macroeconomics, and they're like, we don't know.
Yeah.
We don't know. So I'm not going to pretend to know, other than I can't believe that if it's a 10th hotter, that's going to make things like if it was a 10th lower, what would have happened? We cut rates? No.
Yeah. Right? I mean, right. Would rates have gone 100 basis points the other way? No. So,
but hey, the good news is the stock market's doing pretty damn good, right?
Yeah. Look,
401k is doing better.
401k. Look, the bottom line is, if you look at this, you go, all right, well, now at least my money sitting in a normal checking account or savings account's making 5, 6, 7% versus zero, or the old free checking they used to offer us, right? They got brilliant with that marketing. Hey, we offer free checking. And I've told this story before, Andrew, man. I remember one time going with my mom and dad. I was young, and they walked out with a microwave. I don't know. That's when the banks used to give you money. I mean, I remember opening an account one time because I had an LSU signed football, and stuff like that. But I remember as a kid, they got a microwave, and who knows what it was back then and at the time. But, but it's different now. And here's what I know. And in my market, and I'm sure it's the same in yours, and I'm going to go across the whole U.S. of A, man. We're resilient people, bro. And we are going to work our tail off. We're going to do what needs to be done. You got me there? Hello?
Yeah.
All right, good. So, we are a very, very resilient people. And I think at the end of the day, we're going to do what needs to be done to make sure that we survive, Andrew. And that's what it comes down to. And there's still a market, and there's still opportunities right now. You agree?
There's more opportunities, I think, because less people are able to buy. Like I've always said, it's going to make the the inventory is lacking, but less people bidding is going to make sure that people have a better opportunity to secure a home, right?
Right.
So we've said that always. So maybe it's a godsend, but in the end, if you buy a home now, regardless of what the rate is, you're gonna make out in the future. So one of those things that we were looking at was shelter income. Like shelter income is how much you're paying for rent, and that's gone up greatly, and it keeps going up. So pay someone else's mortgage or pay your own. You're gonna have to pay to live somewhere. Might as
Yeah,
well.
and that's a great point. And so, at what cost, right? So, my thing is, I did some home buying myths this past week, and one of the home buying myths was it's cheaper to rent than own. And my initial response to that when I discussed that is, how do you know?
Right.
Right? Let's find out. Let's see. Or is it or not?
It might be. It's easier to rent than to own because you don't have to take care of anything, but it's certainly not cheaper, right? And I got to tell you, you did a quick change faster than Superman in a telephone booth.
Right? How right? I mean, what a
pretty
skill
good.
set.
That's pretty amazing.
What a skill set, right? So, yeah, because
All right, so today's topic, we're going to talk about DTI, debt to income, right?
Yeah.
And
turn up your mic a little bit, Andrew.
let's do that. How about that? How about now? Do we sound better?
Yeah, let me see. There you go. Yep.
Better? All right.
Yep. Like it.
All right. So debt to income. It's something that you and I always talk about. We explain this to our borrowers, but there are some misconceptions on what is included and what is not included. And we're going to talk about two parts to it, right? Because there's a front end and there's a back end.
So yeah, and I think when it comes to DTI, there's a lot of myths. There's a lot of stuff out there. And like you said, DTI for us, the acronym stands for debt to income ratio. And that's basically how you decide what program you qualify for is based on that. But, I want to start off, Andrew, by let's kind of tell people what's not included before we get into the front end and back end, right? So kind of because a lot of people think I have a car. Well, yes, we got to include the car note, but we don't have to include the car insurance.
Right.
Right.
Sure.
With some other stuff, cell phones,
utility bills,
your current rent. A lot of people think of their rent as a bill and don't understand when you go and buy. So that keeps them, when I've had people trying to figure that out, right? They go, I can't afford this. They're so used to paying the rent, they look at that as a bill. Right. And I think at the end of the day right now, what I'm finding in our discussions and talking to clients is what you can afford and what you're willing to pay is two different things.
Two different things, right?
Right? And I think that's why it's important we kind of break down DTI, because when you're kind of figuring out your budget and you're working through that, we want you to be aware of some of those things that are not included, right? Like we said, that cell phone bill, that auto insurance. Yes, you got to pay it, but it's not something that's going to keep you from disqualify you from a loan, so
obtaining a mortgage, right?
Correct.
Right. Yeah.
So let's get into it, Andrew. And when there's DTI or debt to income, there's two of them. There's front end and back end. So let's talk a little bit, Andrew. Kind of walk us through the front end, also known as housing ratio. Kind of talk about what that includes.
I mean, that's going to include your principal, interest, your taxes, and your insurance, your PITI, right? So if you were to buy this set home, and we break down the taxes, so the whole kit and caboodle, and that's actually mortgage insurance too. So and HOA. So everything that's associated with you living in this house that you're going to buy, this real chattel, that's the front end ratio, and it's only the front end ratio. It includes nothing else.
That's right. That's right. So that's important for you to know, listeners, as you figure this out. That's just your housing ratio. That is what you are looking at paying for that house. Mm-hmm. That is what your monthly cost is going to be for that house. If you don't pay anything else, this is what you're going to have to be paying. And that is in relation to, when we say in ratio, it's in relation to your gross income when we're qualifying you, right? Like, we don't just pull that number out. So what is your front end ratio based on? It's based on your housing expenses, principal and interest, taxes, and insurances, on your income that we have you qualified on. I don't want to just say gross, because if we're self-employed, you have net and stuff like that, right?
Yeah, qualifying income. There you go.
Qualifying income.
Yeah, there you go.
I like that.
So that's the front end, and then you got the back end.
Yeah, and this is why we pull credit, to find out your back end. Let's face it, right? I mean that's, and kind of think about it that way too. We told you what's not included. What is going to be included is kind of what's showing up on your credit report.
Right.
I mean, that's an easy rule of thumb there.
And that's going to be your, anything that's revolving and anything that's an installment. And also, guys and gals, if you're on as an authorized user, if you're co-signing for somebody, anything that you have responsibility for, that's going to be included in that back end ratio. And that's what's also going to be reported on your credit report. But credit report's a whole nother topic for a different day.
Yeah. And maybe we'll break down a credit report on another topic. But I think you brought up a good point there. Hey, are you authorized use? Those are the debts that we're looking at. That's going to be your total ratio. Because at the end of the day, the investor, whether it's FHA who's insuring a mortgage, or if it's through the GSEs, Fannie, Freddie, or anybody like that, they're going to want to see what is your total ratio as well, right? Because we can't just say, hey, their ratio's 30% on their house, but you got 4 car notes and your ratio's 80% on the back end.
Right.
But that's kind of what we look at to determine, hey, if they're at 52%, maybe we'll look at or consider an FHA loan, or if they're above 45, so to speak, and start looking at different things. But there's a lot of stuff out there, and they tell you, oh, your front end ratio should be, 23 and 36. No. I mean, that was cool in the 70s, right? But that's not what it is anymore. Cost of living is more. So your buying power, again, is based on not what you can afford, but also what am I willing to pay?
Right.
And then there's tricks within that too, right? If you have an installment loan, let's say you've got an installment loan and you've got $4,200 balance and your payment's $400 a month, well, we'll get you to pay $250. We'll get you under 10 payments, and then we could get rid of that $400, helps you qualify for a little bit more money.
Right. So 10 payments or less on an installment loan, even though you have to pay it, we can omit it from your debt to income ratio.
That's right. On installment only. An installment means fixed. There's a term on it.
Yeah.
Right? That's not on your credit cards.
Right.
Or anything like that. Also is your student loans on there. And I know whatever's going on with that right now, but under certain programs, FHA, it's 0.5%, and then Freddie and Fannie, the GSEs, it's 1%. Listen, even if you're not having to pay those or whatever reason being, we still have to count that in your back end ratio, not your housing ratio, to qualify.
So Freddie, it's 0.5% too, not the.
I'm sorry.
That's all right. You knew that. You taught me everything I know.
Yes. No, come on. Hey, that's what we're here for.
So 0.5% Freddie conventional, 1% for Fannie.
Yep.
0.5% FHA, and then we have the VA is a whole nother, qualifying thing. I think it's 12. Is it 5% divided by 12? Right.
Yes.
So
yeah.
But anyways, look,
of the balance.
Even if it's deferred, we still have to account for something, right, guys and gals? Just let you know.
And a lot of you will send over, hey, I don't have to make a payment. But what you're going to show there is you might have got something deferred for the next 12 months. Yeah. Deferred used to be fine. We used to get those letters all the time. It was amazing. We can't anymore. Now we've got to have something we've got to count. So there's tricks. You use Andrew, you use myself. We'll teach you those tricks. We'll kind of get with you on some of those tricks with the student loans to help you qualify from that standpoint. So keep that in mind. If that's what's keeping you on the back end, you think I can't afford something because, look, I get it. The insurance bills come, the cell phone notes come, all that stuff comes. Don't let that be something that's keeping you on the sideline. Get with your lender. Find out, is this something I can afford or not? And let's break it down for you and see exactly what can be done for you.
But ultimately, in the end, you're right, though. Some of these other bills aren't accounted for in there, but that's why it's important that you discuss with your loan officer what a payment could look like, because ultimately you're going to be, I'm gone, you're gone, the realtor's gone, but the consumer's making that mortgage payment, and they have to feel comfortable about this.
That's right.
So that's the key.
Yeah, and I think that's what separates a lot of folks are trying to push things right now. And like I tell folks, look, What's your spirit? What do you sleep on it? What does that tell you? How do you feel? And then we roll with it, right?
That's it.
But also remember too, and we've said this a lot. Right now is a very unique situation, and a lot of lenders out there can't see the forest through the trees to help you understand. You're marrying the house, you're dating the rate. This is temporary. If me and Andrew knew what day rates were going to get better, we'd be doing this from the Taj Mahal or from Caesars, right? Not right here.
Sure.
So keep that in mind. It's all going to be based on, but don't get, this is not anything you get today. People refinance every so many years, every few years when they had 3 and 4%.
Sure.
So the first opportunity to get off of this 7.5%, they're going to jump all over it. So just keep that in mind.
Right on. There you go.
What else, big dog? That's all you got?
I mean, I think that's about it. I think everyone, keep moving
Easy
forward.
topic for us, but
Yeah.
it's something that a lot of people confuse and don't buy because they're unsure of. So I think it's something just to make sure that you're aware of. So remember, front end, aka housing ratio, is just your housing payment, PITI, principal, interest, tax, and insurance, and your back end, okay, which is not your rear end of your body, but your back end ratio that includes your installment and revolving debt, student loans, stuff like that.
Right. Easy. So if
Easy
you have
stuff.
questions, call. Don't assume. And it's okay to call.
Absolutely. Pick up the phone.
Yeah.
We're old school. We like making a call. I called a client the other day and they're like, my gosh, all these other lenders you're competing against are emailing and texting. And I'm like, yeah, I'm kind of old school.
Yeah.
It was a difference. So, sometimes you want to know this is a house. It's your largest asset, your most valuable, biggest purchase you're going to make. Pick up the phone. Let's chat. Let's have
conversation. I think we give great phone too.
We get, our timber is amazing on the phone. We have great timber.
Right. There you go. Right on. Right on.
All right, DNA Nation. Hey, go check them out. Andrew Makovic. Go follow him. Mortgage DNA. Google it. You'll find us. We're on YouTube. We're all over the place, coming to you, getting more and more popular each week. We'll be back on our regular scheduled time for our weekly Hump Day Holla. Right. And then mortgagegumbo.com as well. So
every
next
Saturday,
week,
right?
You boys.
Whoa. Every Saturday. Tell them. Plug yourself.
Yeah, Saturday. Every Saturday, 9 a.m. Just Google Mortgage Gumbo. You'll find it. Go subscribe, all that kind of fun stuff. So as Andrew and I continue to get more popular, we're putting together a website and all that fun stuff. And then we'll get it out there. But if you've got a topic, send it over to us. We'll be more than happy to chat with you about it as well. So till next week, DNA Nation, highlight your boys. We out.